We have with us on the call Mr. Pranav Amin, Managing Director, Mr. Shaunak Amin, Managing Director, Mr. Mitanshu Shah, Head Finance, Mr. Ajay Kumar Desai, Senior VP Finance, and Mr. Jesal Shah, Head Strategy. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation completes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pranav Amin, Managing Director. Thank you, and over to you, sir.
Thank you, Margaret. Thank you, Margaret. Good evening, everyone, and thank you for joining the fourth quarter results conference call. I'm sure you will receive the unaudited financial results by now. Since the auditors are based in Mumbai, they face challenges completing the audit during this lockdown period. We will publish the audited accounts whenever the situation returns to normal. However, in the interest of stakeholders, we are going ahead and publishing the financials today, and we had a board meeting today as well. Mr. Baheti couldn't make it here as he had a family exigency. In the meantime, I'll ask Mitanshu to take you through the financials for the quarter and year ended 31st March.
Thank you, Pranav. I'll take you through the numbers for the quarter and the year ended 31st March 2020. During the quarter, total revenue grew by 30% to 1,207 crores. At 339 crores is 28% of sales. Pre-R&D EBITDA is 42% of sales. Net profit after tax was up 81% to 225 crores. EPS for the quarter is 11 rupees and 93 paisa per share versus 6 rupees 58 paisa in the previous year. During full year 1920, total revenues grew by 17% to 4,606 crores. EBITDA at rupees 1,213 crores is 26% of sales. Pre-R&D EBITDA is 39% of sales. Net profit after tax was up by 42% to 829 crores. EPS for full year was 43 rupees and 98 paisa versus 31 rupees in previous year. CapEx for the year, including capital advances, was rupees 731 crores, very close to the last year number, which is also around 650 crores. Cumulative CapEx, ongoing projects under WIT, including pre-operative expenses for all the 4 plants, was 1,492 crores. Financial assistance to LER JV for the year was 205 crores. Cumulative financial assistance stands at 677 crores. The gross borrowings in the consolidated balance sheet are 1,749 crores, which are up by around 620 odd crores vis-a-vis last year, and we have 81 crores of cash in hand. So net borrowing stands at 1666 crores. Debt equity remains at 0.52. Dividend, we had declared a dividend in the previous board meeting on 6th of March. Dividend on equity shares was at 10 rupees per share, which is 500% for 1920. Previous year it was 5 rupees 50 paisa. I will now hand over discussion to Pranav for his presentation on international business.
Thanks, Mitanshu. It is another good quarter for the international generics business. GMP compliance continues to remain a focus area for us. Our formulation plant F1 was recently audited by the FDA, which received 4 observations. These are procedural in nature and largely to do with SOP improvement. We have submitted a response and are waiting to hear back from the FDA. Apart from formulation 1, the other plants all have the EIR in place. We filed 10 ANDAs during the quarter, out of which 4 were from Allure. We filed 25 ANDAs for the year, which includes 11 from Allure. The R&D expense was 185 crores for the quarter, and for the full year we spent 645 crores, approximately 14% of sales. We filed the first of our ANDAs from formulation 3, the general injectable facility, during the quarter. We will file the first ANDA from the onco injectable facility, which is formulation 2, in the second half of this year. Exhibit batches were also taken in the quarter at Formulation 4, the new oral solid dosage facility at Jarod. We received 34 approvals during the year, and we cumulatively have 119 NDA approvals. We launched 5 products during the quarter and 22 new products during the year. We plan to launch approximately 10 products in the first half of this financial year as well. In terms of financials, the international formulation business grew by 80% in the quarter to 710 crores, whereas for the year it grew 40% to 2,473 crores. The US generics grew 85% to $77 million for the quarter and 52% to $270 million for the year. The rest of the world generics grew by 63% in the quarter and was flat at about 500 crores for FY20. Shaunak, we're going to talk about the domestic before Q&A.
Good afternoon, everyone. Let me just run through a couple of the domestic numbers. Overall for Q3, sales grew by 13% to 342 crores and it grew to 1,425 crores for the financial year with 3% growth. The specialty segments for us grew 10% in the current quarter, and for the acute it grew by 24% in the current quarter. Other than that, I think this quarter has been a quarter of some recovery for our business. As you guys are aware, last financial year we did take certain strategic decisions which impacted our business for the last 3 quarters of the year. And post that, we're seeing some of these strategic interventions giving us good traction. We're seeing a strong ramp up in our business, which should give us a lasting impact on our top line as well as a substantial impact in our P&L. All our segments for growth are completely aligned in terms of having high growth molecules and high growth brands driving our key growth segments like acute, CV, gynac and gastro. As per this time, the impact of COVID on the business in this quarter has been neutral. There have been some positives as well as there have been some negatives in the month of March, and we're seeing that trend continue in the month of April. So net it's working out to be equal for us. Along with that, if I could just give you a small commentary of the business, over the last 2 years we have been focusing aggressively on a far more scientific and medical marketing driven approach to communicating to our customers. And after some amount of lead time, it started to give us big dividends, and it's allowed us to cut through the clutter and communicate with our customers on our key brands and those key benefits of our brands. Along with that, there is still substantial scope for this business to ramp up over the next 3 quarters in terms of operational as well as in terms of strategic interventions that we've taken. So, we look forward to, driving the business and, seeing some of these numbers really pan out, hopefully. Thanks. I'd like to open the floor for Q&A now, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Anmol Jaju from JM Financial. Please go ahead.
Yeah, hi. Thanks and congratulations for a good set of numbers. My first question is to Pranav. Pranav, if you look at the full year as well as the quarter, US continues to do extremely well. So if you were to kind of break down this $90 million of incremental sales that you have had over the FY19 base, I know you won't go into exact numbers, but directionally, if you were to break down the benefit of this $90 million between patterns and pricing in some of our base portfolio, as well as some of the new launches like Jesal, how would you comment on the interplay of those two, which drives such stellar performance in the US?
It's a good question, but I can't really give the breakup of the sartans and the others. What I, however, can say is because we get this question a lot about what our base business is. And what I'm seeing, and it's not like a one-off or something, I think consistently for the last 3 quarters, the US revenue has been at about, in dollar terms, in terms of $70-odd million every quarter for the last 3 quarters. So I think it's safe to say that this is a new base for now. Moving forward from this is what we'll see in terms of new launches, what we can add to it, and new opportunities, what we can add to it, versus on the opposing side will be if there's any price erosion. So our new base that we're seeing now is about $70-odd million per quarter for the US business.
Okay. Thanks, that's helpful. And my second question is to Shaunak. Shaunak, you spoke about the initial impression of COVID being neutral and the revival in domestic business finally having taken off. If the current situation was to continue, do you think this will be the picture for the full year as well, or you think these are very, initial kind of signs where you see virtually no impact on the business as a consequence of whatever positives and negatives you see?
Sorry, could you just repeat yourself one more time? I didn't completely understand.
No, so just taking from your opening comments where you said that, as of now, COVID has been a neutral event.
Yes.
Should not normally impede with the turnaround which has started in the domestic business. Do you think this dynamic to hold throughout the year, or you think this is just a 1-2 month time frame and it's too early to tell how the next 3 quarters will pan? That's what my question is.
Okay. Yeah. So in terms of the business, in terms of the turnaround, I think we're very confident that this is sustainable, and the trends that we started seeing, how we started seeing the business come through, definitely is sustainable, and it's not a 1-quarter trend. It will sustain for the next 3-4 quarters at least for sure. In terms of COVID, I think the neutral impact has been neutral because it's only the last 2 weeks of March that we actually started seeing some impact of COVID. Actually, it's the last week of March where we really saw the impact of related to COVID-related disruptions. So we strongly believe, we're seeing this trend from, continue from December, Jan, Feb. We saw this trend quite rigorously. We're seeing it quite robust, and we see this trend continuing going forward.
Thanks, that's helpful. And last, if I may squeeze in, and this is to Mitanshu standing in for Mr. Baheti. We've seen a fair expansion of working capital. It's not unusual given what's happened in the US in terms of growth. But if we see for the next year, where do you see the working capital cycle stabilize at? And so any common debt, how should that be for the year? What are we thinking in terms of our debt to equity, etc.?
Even if you look at the current set of numbers, it's not at all alarming. If you see the debtor days, they are just 68 days actually. If you look at the inventory days, they are 93 days. So, of course, this will move in absolute numbers when the business does increase actually, but everything is in control when it comes to the number of days the key parameters are concerned actually. So, next year, of course, this will remain in this vicinity in the number of days. Of course, it will follow the absolute number based on the business growth. And debt, of course, it would be a combination of what we have to invest in terms of CapExes as well actually, which we see around 700 crores again for next year. All blended put together, we don't see more than 200 crores of increase in debt.
Okay. I have 2 more questions. I'll get back in the queue. Thank you so much.
Thank you. The next question is from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity and congrats on good numbers. So first question on the US business. So you clearly mentioned, in the last call that for the certain opportunity, we don't think it's only a near term, it's a medium to, medium term opportunity. So what has, any update there, any more competition coming or, on the volume side, you already seen US business Q&Q improvement. It's largely sartan led or there are more to read into it?
So, Anmol also asked a similar question. And as you know, sartans is a big part of our portfolio over the last 2 years we've added it because Alembic is present in pretty much all the sartans, and we don't have any impurity issues with any of the sartans, right? So we have a big basket of sartans all put together. It's almost about 15 different ANDAs of sartans which are there. So it's a big portfolio for us. Having said that, competition has increased, but and I said in the last call as well, my outlook remains the same. I said 3 to 6 months. I still feel that another 3 to 6 months, I don't see anything changing because the pure volume of sartans is still huge, and there's a lot of demand, and we're just trying to keep up with the demand right now.
Okay, so 3 to 6 months is a rolling one, and depending upon how the competition changes, maybe you can update us.
Yeah.
Okay, and you feel... Sorry,
just to clarify one more, and I think what's important is one has to realize that there's about 15 ANDAs of sartans, there are different combinations. So it's not only one particular sartan which is making up our sales, it's a combination of all of them depending on where the volumes are.
No, that helps. Thank you for that. So the other question is on, the capital work in progress. So I understand, the 3 large facilities, the onco injectable, general injectable, and I think one more, right? So oncology. So these are still under, still capitalized. So when do we start seeing the pre-op expenses as well as depreciation kicking in? Should we start building in fiscal 21 or it should move to 22?
Largely we'll see, except for F4, which is the Jero's facility, this would be in FY22.
Sorry, can you repeat that?
Except for Jero's facility, F4, F2 and F3, both general injectable as well as onco injectable, would go in FY22.
So what will kick in 21 and the quantum?
So what will kick in would be a Jero's plant, and that's a smaller plant with lesser overhead. That would be around 40 odd crores.
That is in the operating side, operating or below the EBITDA?
So I think this is the operating cost.
Okay. So we'll start seeing this cost in the P&L?
In H2. Prakash.
In H2, okay. And 40 crore is the annualized number, so half of it will come through. Is that correct?
That's true, Prakash.
Okay. And for the other 2 facilities, onco and the general injectable, that is 22. But if you could help with the quantum, please.
Yeah, sure. So in H2, it would be like we expect both of them around H2 time of FY22. And quantum would be, operating would be 250 odd crores.
Okay. Okay. So this is annualized, obviously.
Yeah, annualized.
Okay. Okay, perfect. And last question for India. So we have seen a significant recovery, but what struck me is specialty versus acute. So specialty 10%, acute 24%. Well, if you see the ARCD data, there was a lot of pre-buying in chronic specialty side. For you, it is the other way around. So is it on a low base or a Zithro product based, or what has led to that kind of high growth on the acute segment?
I think acute partly was driven by azithromycin as well as the cough and cold portfolio.
Okay, so this can continue, I would believe, right?
It will continue.
Okay, perfect. Thank you. I'll join back with you.
Thank you. The next question is from the line of Aditya Khenka from DSP BlackRock. Please go ahead.
Yeah, hi. Thanks for the opportunity. Shaunak, a question for you for the domestic business. So, I understand we have taken some few strategic initiatives in the domestic business over the past few quarters. But, if I look at Alembic for the last 4-5 years also, there has been a performance which is inferior to the broader market. We have lost market share at a category as a company we have. We may have gained a few molecules and lost in certain others. So what I want to understand is what is the way forward? How are we changing the business model? I understand the initiatives taken as to reduction of discount, etc. that I figured. But how do we make our place prominent again in this industry? How do we ensure that we gain market share and grow higher than the market going forward?
Okay, so 2 parts. I'll answer the question in 2 parts. So we see any of our key focus brands, we've not lost any market share in that over the last 4 years. Actually, we've gained market share in all the key focus brands. Where we have lost market share in the last 4 years is products which we have said are not critical to us in terms of long term. And in classic case is something like a injectable penicillin, or if you look at lot of tail brands which have been rationalized over the last 4 years. So that is it. Secondly is a generic portfolio, which we have been defocusing on, and that part of the business has substantially come down. So if I put all these put together, yes, we have lost market share. But if you look at my key brands and we do a brand up market share portfolio construct, we haven't lost market share. We actually gained market share. So that's just to clarify that question. Second thing is, after all this, some of these, the decision that we have taken was something which was affecting our market share gain and preventing us from sustainably driving the market and driving prescriptions, which after this correction, we feel a lot of those loopholes have been plugged, and we see, a big growth in that. In terms of how is our performance, I think looking at these days numbers, I want to definitely look at outgrowing the market and definitely look at, looking at a good double-digit growth with a market share gain over the next 3 years at least.
Fair enough. And would you say that your domestic field force productivity now is optimal, and you would need to hire incremental number of MRs to grow, or do you think there is scope for your MR productivity to improve over the next 3 years?
So I think the way we look at it now is that what is optimal, whether our productivity is optimal or not, I'm not sure, but what we are looking at is as and when in specific areas and specific divisions where we see a scope for expansion, we definitely want to look at adding in a systematic way. I mean, we don't foresee a large single time expansion to happen at any given time, but I think over a year, definitely every quarter we will look at adding manpower to our strength in key areas, because we are underrepresented in the market. I mean, if you compare my active team size versus anyone else in the industry of a comparable size, I think we're pretty much maybe 70% of what all our competitors are running at. So I think we will do that, but we will do it in a very selective way and not in a one-shot expansion.
Got it. And Pranav, a question for you. So given what has happened in the US market in terms of, high infection rates and obviously some supply chain disruption because of China and COVID and all, has the bargaining power equation between a supplier and those 3 large buyers in US changed somewhat, or would you say it hasn't impacted that equation at all?
No, I think as of now, I'm not seeing that in the market. We haven't got any feedback of that. You realize most of the products are coming on the finished dosage side are coming in from India. So I don't see that. I don't see an impact of that as yet.
Right. And to that extent, your base business portfolio in US, has it seen price erosion of mid-single digits, low single digits, high single digits?
You guys asked me this question. It's very tough to say. I think it's very product specific. On our overall portfolio, we haven't seen much erosion. If at all, if I had to just put it all together, probably in low single digits.
Okay. Just to harp on that, would you say a certain portfolio is seeing price inflation even now, or have the certain prices stabilized in the US as we speak?
No, so again, what I told Anmol and Prakash earlier, that there's about 15 odd sartans, so we're seeing a lot of fluctuations in all of them. So it's a combination, it's a weighted average, we have to see how all of them go, because there are so many strengths of them, and not everyone is able to keep up with demand for each of them.
Understood. Do we sell azithromycin also in the US and ROW market?
Good question. We do have a ANDA that was approved, and we should be launching it in the next few days. Our shipment's already in the US. We should be launching it in the next few days.
Right. And do we do that in the ROW market as well?
No, we supply mainly the API.
Right. Got it. Just one last question for Mitanshu. Mitanshu, if I look at the gross margins, 3Q was 75%, 4Q, despite being like a lower India business quarter, has seen a significant gross margin improvement. Any pointers? What is leading? Because what I was hearing was because of the China COVID disruption, raw material prices have actually gone up. But on the other hand, we have seen inflation in our gross margin. So what exactly led to this?
It's all about, product mix actually. If you see my Q1 margin profile was as good as, Q4 actually. And then, Q3, Q4 were like, 3% off from Q1 and Q4 numbers. So I think it's all got to do with the, also somewhere, depreciation of rupee plays a bit of a role there. It helps actually, right, Aditya? So that's the case. So, and yeah, 77% kind of margin is for the average for the year actually.
That's India business impact.
India business doesn't that much. It's more stable business.
Yeah. Thanks.
Okay. Yeah, I'll get back in the queue. Thanks.
Thank you. The next question is from the line of Rashmi Sancheti from CGS CIMB. Please go ahead.
Yeah, thanks for the opportunity and congratulations on good set of numbers. Most of my questions have been answered. Just two questions. What will be the guidance of R&D in FY21 and going ahead?
So we don't give a general guidance per se, but approximation. I think this year we ended up about 650. I think next year we should look at about 700 or so.
700 or so.
Yeah.
Okay. And sir, how many product launches have you done in India business in FY20? And if you could bifurcate in acute and specialty segments.
I'll have to get back to you on the numbers, but in terms of product launches in 20 in domestic, there haven't been many. I think we launched, I think the main launches for which happened in Q4 was Vildagliptin, and if I had had any large launches, I'll get back to you on that. But there have been no large launches per se for us. We had one, yeah.
So you mean to say that it is mainly single-digit launches?
Yeah, it's single-digit launches for the year.
Okay, so post this turnaround in the domestic business, what kind of run rate we are expecting going ahead?
Sorry, could you just repeat the question?
I mean, in FY21, how many launches we have planned for India business?
I'll have to get back to you on that number.
Okay, fine. I'll take it offline. Thanks for the opportunity.
Thank you. The next question is from the line of Dheeresh Pathak from Goldman Sachs. Please go ahead.
Yeah, thank you. For FY20, can you give a breakup of the capex in terms of the core capex, the OPEX capitalized, and the R&D capitalized?
Yeah, sure. So core capex was 300 odd crores, which is all maintenance capex and R&D capex and all put together. Then we had project capex including pre-op, which was around 370 odd crores.
This would be mainly OPEX capitalized, right?
OPEX in that was 250 odd crores.
250 odd crores, okay. And R&D capitalized on how much?
R&D was not that big a number, around 50 odd crores.
Sorry, say that again, Mitanshu?
50 odd crores.
50 crores. Because in the last call you said 155 was R&D capitalized Elior.
No. Dheeresh, that is a different thing. That is, R&D, the intangibles that of Elior actually. So,
correct.
Yeah. So this is a core capex that we are talking about in Alembic Pharmaceuticals, which goes into your PP, plant and machinery.
Okay, but what was the Elior R&D capitalization?
Elior R&D capitalization for this year, you mean to say?
Yes, FY20.
Around 120 odd crores.
120 crores, okay. And when you gave that 700 crore capex number for FY21, does that include the OPEX capitalized also, or this is just the capex number?
Yes, it includes the OPEX as well.
And does it also include the Elior R&D capitalization?
No. Elior R&D capitalization doesn't form in part of that capitalization. That forms under the intangibles, which we do not consider as part of the core tangible capex.
Okay. So when you gave the plant-wise analyzed OPEX, you said F2 and F3 combined is 250 crore on an annualized basis. F4 is about 40 crores, that is 290. And then how much is Elior on an annualized basis? Although it is getting expensed right now, but just to get a sense.
Around 75 crores.
75 crores. Okay. Okay. And there was some goodwill and investment impairment. Did you call it out earlier? I was not there in the call in the earlier part. So can you explain that?
So this is first time that you are asking it. It is about audit actually. So what we have done is audit had some intangibles and goodwill actually. So we have done accelerated amortization of that piece.
Okay, so it is all written off now there, or there is something else that can...
No, it is absolutely.
Okay. All right. Thank you so much, Mitanshu.
Thank you. The next question is from the line of Damayanti Kirai from HSBC. Please go ahead.
Hi, thank you for the opportunity. Coming back to gross margin, so given now you said we have like nothing changed for next 6 to 9 months for the certain opportunities, plus India improving. So how should we look at the base gross margin trend?
See, I mean, it's function of lot many things, right? It is function of what product makes. It's function of where dollar rupee. So a lot of things influence it. But I think it would be around 70-75%. It would be hovering around that range.
Sorry, 70 to 75%.
Yeah, I mean, it is larger, broader, base because it's difficult to pinpoint on a particular number.
Okay. My second question is, can you update us regarding your manufacturing plant status or your logistics situation compared to like what you have given a few weeks back? Are we gone back to 100% like operations? In between, obviously there was some disruption on, but what is the situation right now?
Yeah, so good question. I think as we are at practical 100%, in terms of realistic and in terms of theoretical, it would be a little lower, because what we do is in this period, first of all, in the first few weeks, there was a little shortage of the labor force. And secondly, what we do is we stagger some of the shifts and working. So we reduce, so we would be at about 70-80% of our regular capacity.
Okay, that's the manufacturing plant. And so how about the supply in terms of both inbound and outbound logistics? Like how we are seeing...
No issue there.
So it's coming normally, because I think we heard in between that there were some shortage of people at the ports and all that.
You're right. So a few things. One is, as I said, I think what happened at the ports, there was a shortage pretty much in the first few weeks of the lockdown. But as you know, we generally carry a lot more safety and buffer stock, so we were absolutely protected with that. One of the reasons why Europe, if you saw compared to Q3, the sales are a little down, about 10 crores, is some dispatches were held up for the customs and the clearance and flights. But now I think we're seeing regular movement of all inbound and outbound, so it should be an issue.
Sure. And if some of this current lockdown extends, do we see any impact, or we should be operating normally without facing any much impact?
I don't see that there's any impact. I think we're fine.
Okay, that's all from my side. Thank you.
Yes.
Thank you, ladies and gentlemen. In order to ensure that the management will be able to address questions from all participants, we would request you to please limit your question to 3 at a time. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Harish Kumar Gupta, an individual investor. Please go ahead.
Hello.
Yes, go ahead, please.
Yeah. Hello.
Yes, please go ahead.
Yeah. Sir, I think my almost all the questions have been answered. So you can.
Thank you.
Thank you. If you wish to remove yourself from the question queue, please press *2. Thank you. The next question is from the line of G. Vivek from GS Investments. Please go ahead.
So congratulations on good set of numbers. I just wanted to have the macro idea about the sector as such. Is there a shift in manufacturing from China to India on lines of agrochemical sector also worldwide? Because world wants to reduce the dependency on a single country and location.
it's a macro question. I think it's a little tougher to answer. It depends which product and which market it is going to. What is most important is to ensure that your supply chain is reliable. I'm not seeing any anti-China right now. I think we want to ensure that we have more robust supply chains, and that's consistently we've been working on that by having multiple sources, not just China but India as well.
Okay. And sir, basically the opportunity, the numbers which I believe have been aided in US market, other people have also raised this query, but I've recently started tracking the company. So if you can excuse me for that, Sartan seems to be a one-time sort of a thing, or will it keep on happening and we'll keep on getting some other molecules? And if some of the differentiators for our company which you can highlight, I believe our front-end capability in the pharma sector in US especially is really good. And some other differentiators you can highlight, sir.
So, it's a good question. I think a lot of people have been asking it, but I'll just clarify. So, sartans is a big portfolio because the sartan products are very high volume products. So, we did see an opportunity this year. We saw it actually last year also for one quarter, and this year for quite a few quarters. Consistently now, our base business in the US is about $70 million in dollar terms. So, that's what our base business is, and this constitutes a lot of the sartans, and we have pretty much all the sartans. So, this is one aspect of it. Apart from that, we're launching about 20 odd products every year in the US. So that should also help in getting more business moving forward.
Okay. And so in India, I think I've been a personal user of many of your brands, Decoded and so many, for a long period of time. So we have an enviable range of brands in Indian market also, and any plans of enhancing that also and exploiting more?
Yeah, I think we're always looking at expanding, and I think we are constantly work to build brands, even in the active portfolios, trying to prioritize high growth markets, as well as, in other specialty areas. I think women's healthcare is one area where we had substantial brand building activity that's happened. Cardio, we've had substantial work that's gone on in that area. Gastroenterology we built. So, yeah, we are in the process of building a lot of brands. I mean, no question about it. So.
Thank you. And so COVID helping us overall in the world market, sir, both in India and abroad also? COVID closure and lockout and sort of a pharma demand worldwide, is it the same thing as it is in India?
No, I think, pharma is one area that the demand hasn't really changed much. So I think that's market-wise, we're not seeing any changes on that. Thank you.
Okay, thank you.
Thank you. The next question is from the line of Ashish Thakkar from Motilal Oswal Asset Management. Please go ahead.
Yeah, thanks for the opportunity. Given this lockdown, some of the industry experts obviously say that there was some pre-buying of the medicines. So this is for Shaunak. So how do you see FY21 panning out at the industry level? Do you anticipate that there would be a slowdown in the growth of the acute segment? Any color on this would be helpful.
Okay. So I can't predict what's going to happen because none of us know what's going to happen in the next 3 months, but I can just give you a brief idea of what's happened last month and what's happening in April. I'll look at 2 points in this. One is IMS. If you look at IMS in terms of what the numbers that they put out for March, the first thing is, if you saw the split, if you see largely the market grew far faster for companies between the size of 25 and up. So what I'm trying to say is smaller companies do a lot more had lower growth rates compared to the larger companies. So that's one thing what we're seeing. Second thing, within the portfolio mix, I think the way I see it is, at the moment, essential products are being consumed, at the same rate. So when I talk of, antibiotics, cough and cold, acute segments, I think those we're seeing the same traction, and some amount of, sensitivity due to COVID. Cardiovascular continues. I think the only place where we have seen a slight touch of slowdown is in those non-essential kind of areas. I don't mean non-essential, but things that could be put off to a later date. For example, so a lot of women's healthcare has got affected, the portfolio. Orthopedic seems to have gotten affected this month. So we're seeing a balancing of that, but I think the minute the clinics open up again, we definitely are going to see a quick recovery of that. So.
Okay, so in absolute sense, it would not be fair to assume that there could be some sales lost during the year. If anything happens on that side, it could be recouped. So is that a fair understanding?
I don't think there will be sales lost per se at this moment.
Okay, fair enough. Thanks. So another question for the US markets. So like, are we like in case of a plain vanilla generics, do you see a situation where, the intensity of the price erosion has drastically reduced, and would it be fair to say that it's like almost flattened out now?
As I said earlier, someone asked me, it's very tough to comment on price erosion because it's very product specific, What we're seeing, at least from our portfolio, there has been price erosion in some cases where there's been new launches and price increases in some others. So it's been a mixed bag. So it's very tough to comment on overall portfolio.
Okay. Just last one from my side. So in the US itself, on the ground level, in terms of the competitive dynamics, has some things have changed for us in the sense that some of the companies from other regions or other geographies, would that intensity have come down for us?
No, I think bulk of the competition is amongst the Indian players in the US. So I don't see any change in that.
Okay, fair enough. Thanks and all the best.
Thank you. The next question is from the line of Ranveer Singh from Trinity Securities. Please go ahead.
Yeah, thanks for my question. Yeah, hello.
Yeah, go ahead, please.
Yeah. So, just a clarity on the capex you said for basically capex related to Aleor, 120 has been capitalized in this year. That's what you said, right?
So there are two parts in Aleor, okay? One is about the core capex, which is from 230 crores, which is plant itself, which got capitalized, which was on 30th of September. And then there is R&D spend on the products actually, which also gets capitalized in Aleor, which is the other number.
So for a year, how much amount has been written off above EBITDA on this related to pre-operative expenses?
When we specific questions on Aleor, can we talk offline? I mean, we will discuss the entire balance sheet of Aleor.
Okay. No, so in other expenses, is obviously there would be element of pre-operative expenses in Q4 also.
Right.
So that I wanted to understand. But anyway, if this is not available, I will talk later offline.
Specific thing with joint venture Aleor, let's do it, one-to-one. Yeah.
Okay. Secondly, I see interest cost is flattish while debt has increased significantly. So why is this so?
Yeah, so what happens is that bulk of this loan has gone to fund the new capexes, which are the projects actually, and that obviously portion of that interest goes and gets capitalized. That's why you don't see that impact on P&L.
Okay. And have you seen any pricing traction in azithromycin in domestic market?
No, I think this is price control. So I think we're limited by WPI. I think if I remember clearly, WPI last 12 months was I think 1.2% if I remember clearly. I could be wrong. I'll get back to you on that.
Okay.
Thank you.
Yeah. Thanks.
Thank you. The next question from the line of Prakash Agarwal from Axis Capital. Please go ahead.
Yeah, thanks for the opportunity again. Question is on the launches in the US. So in the presentation you've highlighted, launched 22 products. So the base business that you're talking about is the existing portfolio. So would it be correct to understand these 22 products launched during last financial year plus the 10 that you planning to launch for the first half? That is over and above. That's correct understanding?
No, so base business, because that's how we look at okay. The 70-odd million, what I'm talking about is with the products that have also got launched. That's one thing. Second is in terms of us and Alembic, our strategy, you see, whenever on the first few weeks or whatever of a launch, we don't pick up market share right away. In fact, sometimes we take a while to launch the product as well. That's why it's very tough for us to break up the existing and the old. But this is what our business base business as I see today as on, 22nd April or so.
So this, I'm just trying to understand this 70 million is ex starters or including starters?
Everything, total.
Okay, understood. Fair enough. And just one question on, the we are seeing daily this shortages updates, which is the list is increasing by the day. So, are you seeing some supply opportunities both on the volume and price side, where which we already in a sweeter spot for the quarter and the year going ahead?
So, and this is, this overall what I've been talking for the last few years is that the US market is one market which there are always supply disruptions. And our strategy is we want to be a nimble player that we can catch some of these supply opportunities. And we keep seeing them. I don't know where the next one is going to come from, but we keep seeing them. One of the ones that we saw recently was there was an increase in the need for famotidine because planitidine was pulled off the shelf. So we keep seeing that, in various products. Sometimes we say shortage, sometimes a little more long term, sometimes short term.
Okay. And lastly, you spoke about shipments. So, as per you, you are having regular shipments, is what I understood correctly, in terms of, because other companies I speak to, they say that they are doing more air freight. So, are you doing regular shipments for your products?
Yeah, so we're doing regular shipments, but we've always done more air anyway. So right now also we're doing more air for our shipments.
Sorry, I'm not able to hear you.
We do more air shipments anyway. I think about 65% of our shipments will probably be by air, and that ratio hasn't changed.
Okay, and the rates have gone up significantly on that, but that would be small cost to the overall scheme of things.
Yeah, absolutely. Yes, spot on.
Okay, got it. And if I may squeeze one more on the finished goods inventory and the raw materials good inventory, what is the company policy like for the export markets? Do we keep like 1, 2 months or 3 months for both finished goods and raw material?
This is a very, very complex question, because it depends which product, what is the regular moving product, how we do it, what's the API availability. So very tough to give an answer to that because it's too complicated.
Okay, but any general comments?
We ideally would like to have at least 3 months inventory, but it's never the case,
Okay, thank you and all the best.
Thank you. Ladies and gentlemen, please limit your question to 3 at a time. The next question from the line of Ajay from AMS Wealth. Please go ahead.
Hi, sir. Thank you for giving me this opportunity. Sir, I have a couple of questions. The first question is regarding the FDA audit that happened, and I think you mentioned you only had some 4 procedural observations. Is it possible to throw some more light onto it, and does that impact the production happening from F1 plant in future?
Okay, so it doesn't impact our production at all or our supplies. There were pretty much procedural. One was there was one which was related to a product what we classified as a withdrawal rather than a recall. So it was they had to make it procedurally clear. So procedure for complaints. Second was just some basic SOPs for gowning, basic SOPs for some camera system, basic SOP for some labels and labeling material. So it's quite procedural in nature. We've sent our responses. We'll hopefully hear from the FDA soon as well.
Okay. And sir, another question related to this. I think there is a slide on the presentation where you have said, the F1 plant has been audited in March 20. Yeah. The API 3 has been audited in Jan 20. So what happens to the plants that have been audited, say like F2 in June 19? So how typically this FDA audit works? Like what is the typical interval? One is that. And second, there are certain plants like F3 and F4 where filings have happened, but there has been no audit. So what typically happens? Just want to understand that. Yeah. But
historically, the FDA used to come once every 2 years, but that is no longer the case. They come whenever there's either a GMP audit, which is a facility-based, or a pre-approval inspection for a product. In terms of F2, it's approved, EIR is in place, so there's no issue there. Product approvals will come as they are filed. F3, the product was just filed in Q4. So typically it takes about at least 9 months to a year by the time they come for an audit. So we should see an audit from the FDA in the next 9 months. As regards F1, commercial sales are ongoing, so there's no issue. We should get the EIR soon.
Okay. So F3, now, if the filings So what happens is if the filing is approved but it has not been physically inspected, can we still go ahead with the production or we have to wait for the final audit of the FDA?
Depends on the FDA, and I don't know what they'll do in the situation. We still have about 9 months left. They normally, if it's the first time, they like to come and audit it in person before approving it. So we still have time, so let's see what happens.
Okay. And so one more question, I'll come back in the queue.
Yeah.
There has been reduction, degrowth in the API segment, even on a quarterly basis and then a full year basis. So can you just throw some light on it?
Yeah, absolutely. So it's a good question. Someone else may also have it. The API business, we have one a custom manufacturing deal, contract manufacturing deal with an MNC, and last year they picked up a lot of business, and this year that is nil. Apart from that, the balance API business has actually grown compared to last year, so that's the only reason why this year is nil less.
Okay. And what trend can we, expect in FY21?
It's tough to give a guidance, but I would expect that the API business should grow this year about 15% or so, 20% at least.
Okay. Thank you, sir. I'll come back in the queue.
Thank you. The next question is from the line of A.N. Lodha from Sanmati Consultants. Please go ahead.
Hello. Thanks a lot for opportunity, sir. Am I audible, sir?
Yes, please go ahead.
Thanks a lot for opportunity. My first question is to Mr. Baheti. And in consolidated, I have observed that the trade receivable has increased to 864 crore against 488 crore.
Yes.
Also, inventory has also gone from 960-700 crore to 1187 crore. So mainly, my question is pertaining to inventory and increase in inventory and as well as trade receivable. Please clarify.
Yeah, so that is an absolute increase in the numbers. You have to see it in relative terms with the growth in the business as well, actually, and also in the number of days. So last year our inventory days were 88, which have increased to 93, which is absolutely fine. We have built some strategic inventory as well. As far as receivables are concerned, our bulk of growth has come from US markets, 53% of growth vis-a-vis last year. And there, with the natural growth in the business, the receivable days also increases. But nothing concerning because it is 68 days in the absolute term. So, yeah.
Okay. Thanks a lot, sir. My second question pertains to sales, sir, which is Mr. Pranav. Actually, we have shown a very good growth in US business, whereas rest of the world and India business, in last quarter, India business has gone. But overall, if you look in the 12-month figures, India business growth is just 1% and the rest of the world is normal growth in the rest of the world also. What is the main reason for India, why we are not increasing our sales in India?
I think we talked about in the opening statement, the India growth is less for the year. I think because we took some decisions to make some changes how we do business. So because of that, we had a couple of quarters of low growth. But I think Q4 is a better idea of how we expect the business to behave going forward.
Can we take this Q4 growth as a benchmark for the FY21, sir?
A lot of the growth will be determined by market growth. So as long as the market keeps growing at a double-digit growth rate, I think we can comfortably say that we will outgrow the market.
But sir, I am tracking this Alembic Pharma and the Greenmark and all other companies which is selling in India. They are showing good double-digit growth, whereas we are a 100-year-old company and our growth is not that much in Indian formation.
So, I think he answered this. There were some questions that what we did cleaning up the business, and Q4 is more indicative of our growth. So in the interest of time, can we take this offline? I can ask Mr. Baheti or Mitanshu to take this offline with you because we have a long line of people in the queue and we're still running out of time.
Okay, sir. Thanks a lot. That's from my side. Thank you. Thanks a lot.
Thank you. The next question is from the line of Nimish Mehta from Research Delta Advisor. Please go ahead.
Yeah, thanks for taking the question and congrats on a great set of numbers. Just two questions. One, on the Febuxostat launch that we had, 1 quarter before, and we were to expect more competition this quarter. Did we see any few months of low competition this quarter? In other words, the Febuxostat big contributor to the US in this quarter?
So I think Febuxostat, if I'm not mistaken, initially there were only about 4 or 5 of us that launched. And since then, there's only been one more entrant in the last 3 months.
Okay, so it has been a big contributor this quarter as well, right? I mean, it can't be in comparison to the previous one, but it is.
Yeah, there's one more entrant came in.
Any reason why competition is not increasing there?
Good question. I don't know. You'll have to ask why. It was a FPF. I don't know why the others didn't file or didn't get approval. I don't know what the issue is.
Okay, cool. And secondly, we've been reading in the newspapers that Baheti in Himachal Pradesh has been impacted because of, supply constraints.
The facilities in Himachal.
Yeah, in Himachal as well. So I'm talking about
facilities in Himachal.
Oh, you don't? Oh, I'm sorry. Okay, fine. I thought you already had. Okay, so, but we are not facing any of those supply constraints, right?
No, I think we are fine. As I mentioned earlier, our supply side we've been okay in both India and the US business.
Okay. Thank you very much.
Thank you.
Thank you. The next question is from the line of Nikhil Upadhyay from Securities Investment Management. Please go ahead.
Yeah, hi, good evening and thanks for the opportunity and congratulations on good set of numbers. Hello?
Yes, go ahead.
Yeah, sir, I have 3 questions. One is because of this issue of lockdown and supply chain issues and a lot of pre-buying, just wanted to understand what would be the inventory in the trade channel in domestic market. So, as I understand, it used to be around 45-60 days. So, is there a big fall in that inventory holding which has happened?
I think the trade inventory, I think that, I think certain areas the inventories have gone up, certain areas inventories have come down. So I think net it should be same.
Okay, so you don't see any major change in the days?
No, we don't see. I think trade channels are operating pretty smoothly now, so I don't think there's any, I think supplies are happening, without hiccups. So I think in the trade there is no overstocking or understocking at this point.
Okay. Sir, on this question of COVID, so we've seen that some of the companies in India have been impacted with the people at the manufacturing side being detected COVID positive. So just want to understand if a similar thing happens, is there a protocol? So does that mean that the whole facility would be shut down or so? Just to understand, is that how do we manage that?
Yes, I'll answer that to you. So what we do is we've taken some precautions. One is the basic precautions, what they recommend in terms of spacing, less people in a bus, canteens have been moved out. Apart from that, what we've also done is we've made a plant into clusters, so each of them are segregated with their own individual canteens, dining areas, so there's less mix-up. So some of the measures we've taken, how it happens, how the government reacts, what kind of preparedness. I think there's some SOPs that IPA has also recommended, and we're implementing those.
Okay, but that does not mean that the whole plant would be shut down. So only a part of it could be shut down and rest.
We hope not. God forbid we get a case, we hope not, but otherwise, depends. I think some plants have got shut, but we are trying to take as many precautions as we can.
Okay. Lastly, sir, on sartans, so I think there was this issue of NDMA. As a result, many of the API suppliers were not there. But now, how do you see, are there new API suppliers which are evolving without this impurity, or how's the scenario developing on the sartan?
I'm not seeing any, as someone mentioned, I'm seeing some more people come in, no new suppliers. I think the old ones who have cleared up. But again, it's a big range of products, so I think overall there's still a lot of opportunities there for the next 3 to 6 months at least.
Okay, fine. Thanks a lot, sir.
Thank you. The next question is from the line of Shah from Kotak Securities. Please go ahead.
Yes, so my question is related to the dependence on China for the raw material, and are those supplies on stream right now?
So, yes, we have seen there was definitely disruption in February, January, but from March we have seen the normalcy returning actually. So you could say that it is around 70% normalcy has returned. So if you were carrying Purvi material for 3, 4, 5 months of inventory at your place, then you are really not disturbed actually.
Okay, so what is our dependence on China for the raw material?
15% on the overall imports.
15%, okay. And so the other thing I just wanted to understand is that now that you've said that, if you have already supplies of 3 to 5 months, you are through for it. But then going forward also, in case there are shipments that are going to come from China, what are the kind of precautions you'll be taking? Because I guess one of our competitors' plant was shut down. So they had that shipment that comes from China where the cases have been found of, the COVID virus.
So as I mentioned, we've taken all the person before this asked the question, and we're taking whatever precautions there are. In terms of this plant, I don't know if they were infected by shipment from China or physical, no one knows. But we're taking whatever precaution we can, and as per the guidelines that have been issued by the government and by the pharmaceutical bodies.
Yes. And the last one is that for Q1, are we seeing any disruption on the logistics side for domestic business because of the lockdown or restriction in movements for interstate?
There was some disruptions in the first 10 days of the lockdown, but I think now it's extremely smooth. I think there's been huge support from the government, both central and state, so we're getting absolute smooth movement of products.
Okay, and sorry, one last one, I'm really sorry. This is regarding the API. So are we looking at like one of the participants in the very beginning had said that, there are chances that, a lot of global MNC players looking at India for certain APIs. So do we see some DMFs that we would like to revive looking at the current situation in case if people would like to shift from China? Do we see some traction on that side?
We see enough opportunities in the current APIs that we already have. We're also making azithromycin, one of the larger manufacturers of azithromycin in India. Yes. So we're just focusing on those opportunities for now.
Okay, so thank you and all the best.
Okay, thank you.
Thank you. The next question from the line of Mayank Hanji from Axis Mutual Fund. Please go ahead.
Hi, sir. Because of the current situation, is there any major change in our thought process of our manufacturing strategy with regards to vertical integration or with regards to supply chain sourcing from various parts?
I think this question was asked to me earlier as well. I think the most important thing is that how we have a robust supply chain, and be it China, India. That's a constant area that we've been working on to ensure we have local suppliers and we have multiple suppliers, and that does not change irrespective of COVID. I think right now we are, as Mitanshu said, by total, as a percentage of total imports from China is only about 15%. So we're still okay on that. Moving forward, we'll develop more as we can.
So there is no thought process right now to increase our vertical integration backwards. That doesn't figure.
So that is also there. We are increasing vertical integration backwards as well in terms of intermediates. And as I said, it is regardless of COVID, because increasingly the regulatory bodies want to inspect intermediate manufacturers. They want to inspect advanced intermediates. So instead of putting yourself at risk after all the filing, you rather have more these in your own control.
Okay. Second question is with regards to the CapEx now, sir. So I believe that we have already done almost 95-100% of our CapEx with regards to all the new facilities, formation facilities which we are doing. So just wanted to understand going forward as part of this 700 crores CapEx, how much is on the facilities, whether it be maintenance or the new towards any new facility?
So as I explained in one of the questions, 700 crores and of the capex that we are talking about, 300 odd crores would be on the projects, and bulk of that would be from the pre-operatives actually. So it's not brick and mortar or machineries for the new plant. That is all done actually. But till we put these plants to commercial use, we would capitalize the expenses.
So basically this 300 crores is broadly our maintenance capex on all our plants currently, and this is the going maintenance capex which we have.
That's true.
Okay. And lastly, is there any change in the API price trend for us, which we have seen in our products, or the products which we are selling basically in the last 1 month or so?
No, I think no real price changes per se.
Okay, great. Thank you. That's all.
Thank you. The next question is from the line of Bharat Dali from Equilib Securities. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I just wanted to get a clarity. Till 3Q, we were maintaining a stance that 50 million would be the base revenues for the US market. However, in fourth quarter now, we are referring to 70 million. So I just wanted to understand what has changed between this period which has led to incrementally 20 million increase in our guidance.
So first of all, it's not a guidance. I'm just saying that if you see the last 3 quarters, Q2, Q3, Q4, we have consistently done 70 million. So it's not that one quarter, first quarter was low, of course, but since then we've done consistently 70 million. That's why I'm a little more confident saying that this is the base business and this is what I expect moving forward, and then what the new launches will do to that.
Right. But sir, when we refer that starters would be another 3 to 6 months phenomenon, and after that it may plunge. So in case if it happens, then will we be looking at a number lower than 70 million, or that number we can still attain by some other measures?
So as I said earlier, the sartans, there's about 15 odd sartans in the market, and some we've already seen some erosion, some there's still been supply disruptions. So it's a combination, and I think I would look at it as how you look at any other companies. If you see an erosion in a particular product or another particular as a basket, that may happen. Now how severe the erosion is, it's very tough for me to predict. But today, as you see, you're seeing a trend for the last 9 months. I'm fairly confident that 70 million is the base number for us.
Right. And sir, is it possible for you to share what is the composition of top 5 products in the US market, including sartan portfolio?
The top 5 products is about 55% of our sales for the US.
And that includes all the sartan portfolio?
And top 5. I'm not dividing sartans, just top 5.
Okay. Okay. Thanks a lot.
Thank you. The next question is from the line of Ayush Mittal from MAPL Value Investing Fund. Please go ahead.
Sir, congratulations on a good performance yet again. Can you share more about the product pipeline that we are preparing now, given that the R&D spends have been increasing even more? Like in this quarter, we have spent almost 180 crore on R&D, and the R&D expense will continue to be at elevated levels, as you mentioned, for the next year. So can you tell us more about how your plan, in what areas are this R&D happening, and what kind of pipeline are we getting going forward?
So R&D investments, there's 2 things. One is you're part of the annual R&D also included in this, number 1. Number 2, what we've been saying, I think throughout the, now we have increasingly more R&D happening in injectable products, ophthalmic products, oncology products, and the new facilities that we're building. So apart from that, and the OSDs. In terms of filings, we said about 25 to 30 odd filings is what we expect. I don't expect that to go up significantly. I think that should remain in the case that we're seeing. We also keep pruning our portfolio depending on market situations. So this year we actually cut some products as well.
This 650 crore won't be including the your R&D, I believe.
Ayush, it is like, the products that we commercialize, we put to use, is something that gets expensed off actually.
So this 650 crore would be getting expensed out in the P&L for this year.
Yeah, that's true. So, annually we have close to 30 crores, which is expensed off in the R&D.
Yeah. So what I'm trying to understand is, like when we compare our R&D expense with any other company, our R&D expense per ANDA is very, very high. It is more than double or triple. So what causes that when we are moving to generic products? And how do you see the payoff happening in coming years?
Ayush, we haven't done a comparison like this. Actually, we've been consistently, having a spend of 13-14%, and you've seen that, it has paid a handsome dividend over last, half a decade or so, actually. So we do not do this comparison, yeah. And we do not know what the grid which others are working on, so we haven't done that. But yes, we can take it offline, we can discuss it.
So something more on the product side, wherein for next 1 year you see some promising products in the pipeline. Can you hint us more about them? Where do you see the next pipeline of products which is contributors?
It's very tough. We can't give a guidance in terms of our products. As I just mentioned that we filed of course from the injectable facility, so we will have more filings for injectables. Yes, I can't really give a guidance of what is expected.
Okay. So other thing on the debt, the absolute debt number, given the CapEx and everything we are doing, seems a bit high now. What are your plans? How do you plan to do the capital allocation going forward for next couple of years?
So if you see, Ayush, what would be our, bulk of our projects are done actually. We'll have 300 odd crores of maintenance capex. And if we continue to kind of, gross the kind of profits that we've done now, we see debt levels to go down in next 2 years from here actually. So, and at 0.52, which is current level, I think it's very comfortable zone that we are in.
But do we plan to reduce it to some absolute